My name is Ian Anderson and I'm the Fund Manager of the Merchant West SCI Global Managed Growth Fund. During the first quarter of 2023, the fund underperformed its peer group by just over 4%. The weaker relative performance resulted from the fund's low allocation to the technology sector, which was buoyed by lower bond yields and which today comprises a significant portion of most global equity indices. Bond yields fell on expectations that central banks will start cutting interest rates again as soon as the fourth quarter of this year. The collapse of Silicon Valley Bank in the United States and Credit Suisse in Switzerland saw the prices of most banking stocks tumble, but the fund's holdings in US Bancorp, which was down just 12.1%, and Wells Fargo down just 5%, weathered the global banking crisis better than most, while the fund's position in Microsoft, which was up over 25%, was the single biggest contributor to performance in the first quarter. The fund's current allocation to growth assets, being equities and listed property, has been reduced from around 90% to the current level of 85%, but remains in line with the fund's longer-term strategic allocation of 90%. The high allocation to growth assets reflects the view that future returns from cash and bonds will be low. The fund's current allocation to equities emphasizes quality over any other factor, and with global growth slowing and inflation rising, quality is likely to outperform other styles, at least in the short to medium term. The fund's bond positions have been maintained at approximately 8% after they were increased from 5% in the third quarter of last year, following a sharp spike in yields, particularly in the United States. Based on a combination of Bloomberg, FactSet, IRIS, and Merchant West forecasts, the current one-year forward income yield on the fund is 3.2%, which compares very favorably with the yield on global money market and income funds, despite having an almost 90% allocation to growth assets. Based on those same forecasts, the income produced by the portfolio is expected to grow at approximately 4.4% per annum over the next 3 years, slightly above global inflation expectations over that same period. The fund is ideally suited for investors with sufficient excess capital and who are looking to build a hard currency linked income for their retirement, and then to manage that hard currency income in retirement such that the major risks facing retirees are mitigated and, in some instances, completely eradicated. Those risks are, firstly, longevity risk. We just don't know how long we're going to live, and so we don't know how long our money has to last. Secondly, the sequence of returns risk. In other words, we need to make sure that we're getting the returns when we need them. And then finally, inflation, which is the hurdle rate, and one that unfortunately grows rather than shrinks in retirement. In a payers and growers portfolio like the Merchant West SCI Global Managed Growth Fund, investors can live off the income provided by the portfolio and not draw excessively against the capital. In this way, the investor's capital is preserved and is only utilized in emergencies during their retirement, irrespective of how long that retirement lasts.